This review is from 2 weeks ago, but that's exactly why I'm posting it. Not to chase the moment, but to document the process properly. This is what real trading looks like when you review it honestly. It had everything: a 990 point pre-market move, platform issues during execution, a recovery back to plus 5%, and then one decision driven by greed that changed everything. On Monday, March 23rd, Trump posted on Truth Social that the US and Iran were in communication. That headline sent the Nasdaq up more than 990 points from the overnight low to the pre-market high. After a move like that, the best decision was to stay out and let the market develop. On Tuesday, March 24th, I developed a bullish bias during the session. Even though my higher time frame bias for the week was still bearish, I believed the move higher could be the manipulation for the week, and I wanted to capitalize on it. But when I executed, nothing showed up on the chart, even though I got the notification that the order had been filled. I didn't want to press buy again because I've dealt with this issue before, where the platform showed nothing while every click was still being executed. So I ended the stream to figure out what was happening. But by the time I sorted it out, price had already moved against me and the position had expanded to double my normal risk size. I was unable to get the stream back up, so I recorded the rest of the session privately and posted the updates on X instead. This is part of documenting real time. Sometimes the process gets messy, but it is still real. Looking back, this long entry was actually the best trade of the session. But because the market stayed in consolidation for most of the day, I ended up closing the trade at near break even. After I stopped recording, price started showing signs that it wanted to break out of the AM session range. So I took another long. That trade stopped me out. In hindsight, the idea was right, but the market did not deliver until the final 10 minutes of the sessions, as you can see right here. On Wednesday, I was still unable to get the stream going. I took a shot before the 9:30 market opened because the setup was there, but that first attempt got stopped out. As I kept watching price, I still felt like the framework for the trade was intact. The issue wasn't the idea, it was that my stop was too tight. So when another opportunity came up, I re-entered the short. Here, I moved my stop to break even. Under normal market conditions, that would be a very logical move and not something I have to think twice about. But this wick had already shown a reluctance to expand along with deeper retracement than expected. So I felt there was a good chance that price could come back and take me out at break even before moving to target. Later in the session, I noticed there was a key level just above my entry level that price could potentially retrace into. So I moved my stop just above that level without exceeding my original stop placement. That turned out to be the right decision because price did retrace into that level and no higher. Here I set an alert below this 15-minute swing low as the trigger to move my stop to break even, and then I stepped away from the chart. Once price moved below that level, I felt confident that my target would eventually get hit. But when I realized that the profit from this trade would be enough to put my account into net profit for the whole series, I decided to close it right here. Price eventually reached my target, but not before another deep retracement that would have been very hard to hold the trade through. That is the kind of detail hindsight usually hides. Real execution forces you to manage what is actually happening, not what the charts look like afterward. Moving on to Thursday. price had been trading one-sidedly bearish into the 9:30 open. So I was open to an opposing move once the session began. I entered based on this inverted fair value gap setup. This 5-minute fair value gap was a key resistance level, and I was watching closely to see whether price can break through it. I believe it could be the catalyst for the next move lower, and once price showed that it was struggling at that level, I closed the long position for a small profit, then used that same 5-minute fair value gap as the framework for a short entry, realigning myself with my bearish weekly bias. This trade went on to deliver 4R, bringing my account balance to over 5%. On Friday, price reached my weekly objective before the market opened, so I took the day off and wrapped up the week. The following week was a non-farm payroll week with a bank holiday on Friday. My protocol was to take the week off and end the documentation process right here, but I didn't. I wanted a new equity high. I let greed and ego override the process, and that decision changed everything.